it needs some kind of growth, but not too much, because when a company grows too fast, it's very hard for the company to sustain the growth.
As investors, it's so key that in order to achieve the level of financial freedom, of financial independence that we want, that when we invest, we really do it in a proper way. And a key thing there is to really understand what we invest in. And that is a trap many fall into, of not understanding what they invest in. So to shed light upon this important topic, I invite with me once again our Kaching hero, Manuela.
Hello.
Hi. So we have myself, co-founder of Kaching Secrets, Joachim here, and Manuela, 2 words about yourself for those that haven't met you yet.
Yeah, I've been a member of Kaching Secrets for about 2.5 years now, and I have done all of your programs. So the stock market program and the crypto investing program. And yeah, I learned a lot from you, and this helped me to become an investor myself. And yeah, I'm very happy about that.
Fantastic. And okay, today, what is on the agenda today, Manuel, to help others being able to produce income through investing for themselves?
Yeah, today we want to talk a little bit about the fundamentals.
And what is this?
Yeah, what is it? It's some indicators that tell us if a company may be a good investment opportunity or not. And knowing how to do a fundamental analysis is so important to understand what you're investing in. And yeah, it helps us to become profitable investors.
Yeah, because it's all about, as investors, we need to protect our money. That's kind of the most important thing we can do, to protect it. And yes, we're gonna put our money to work so they work for us. In the same time, we gotta make sure we put them to work where they are going to work, and yeah, that they will grow behind themselves, appreciating value. So what is the first thing that we can share regarding fundamentals?
Yes, I have chosen 2 points, so 2 indicators for today that we are going to talk about. So the first one is the EPS growth rate, and it basically tells us something about the growth of a company.
Yeah, so this is for investing in companies, in stocks, or in shares, known by many names, but yeah, investing in companies.
Yes, true. And yeah, it tells us about the growth of a company, and it's important that a company has growth, because when it wouldn't grow, it would die. So it needs some kind of growth, but not too much, because when a company grows too fast, it's very hard for the company to sustain the growth, and that maybe leads to a lot of people selling their stocks again, and this will lead to the price will drop. So
that's interesting. Yeah, it's very interesting. And yeah, that a company needs growth, but at the same time, if the growth is too high and it suddenly drops, people might look at that as bad news.
Yeah. So we want a growth rate ranging from 15 to 30%.
Yeah. So yeah, this is about company needs to grow, and this factor that you mentioned, EPS growth rate, is one factor that tells about the growth of the company. And first and foremost, we need to ensure that there is some growth, and also could be an indication of be aware if the growth is too high as well, as you mentioned. Fantastic.
Yes. And the second point that I picked out is the debt to equity ratio. So it tells us the debt of a company compared to the cash in a company. So we want some kind of debt, because debt can be an indicator for growth. So when a company takes up has debt, it helps them to grow. So we want some kind of debt, but not too much.
So debt could be a good thing.
Yes, definitely.
And for us as what we say, like as a consumer, many are, for example, familiar with buying homes, a mortgage. And that is an investment for many of us as well. And then we borrow money to make this big investment in our life because we want particular that house to move. And then, okay, many of us we look at that as like a great opportunity to invest. So we acquire debt to make an investment to move forward in life, and companies can do the very same. And yeah, did you mention that did you mention something about okay, any limit on the debt as well? I can imagine that too much debt wouldn't be good either.
Yeah, so we want debt to equity rate below 0.3.
Yeah. So that means, okay, for every dollar in cash there, or let's say for every $100, there's maximum 30 in debt. Yeah, cool. And when are these principles applied? When would you use these principles?
I research them before I decide if I want to invest in a company.
Fantastic. Yeah. So yeah, it's a key distinction here. Before we invest, we understand what we invest in. And so that, yeah, and these are two important factors so that when you actually do some research, that you can get an understanding of what it is. And in addition to what is this company doing, like how does it make money, etc., who does it serve? And then to really find out, does this company have a future? Will it grow? And can that growth be sustained so it doesn't doesn't have too much depth and just like that it's not digging its own grave?
Yes.
Fantastic. Yeah, these are its key elements. It's all about understanding what we invest in. And what's so great about, like, for example, then American companies is that this information is often publicly available. Like for publicly traded companies, this information can easily be found. And then we can make these decisions easily. And with very clear guidelines as well, it can be quite quick to look over like and evaluate such an investment opportunity. Fantastic. So this is part of fundamental analysis. So that would be, it all starts with you saving to invest, having, setting aside money that you can actually invest at some point, set aside and not afford to see again in a while. And then, okay, we need to understand what we invest in. And when we found profitable investment opportunities, okay, it's all about understanding when do we invest our money, how do we actually do that, and if we done a good job, a great job, or not maybe even good or great, but an outstanding job in the fundamental analysis, we will also eventually be able to take profit. And in the stock market, it could happen like from a couple of weeks, usually a couple of months, up to a year or two. And like utilizing these factors that you mentioned is so key, especially now as well. There's a lot of uncertainty going on, and stock prices been dropping recently, and there's gonna most likely, like, interest rates are going up, inflation is high, what we could call an economic winter. So having these factors at hand, understanding what we invest in, is so key that we pick those companies that's gonna make our money grow. Fantastic, Manuela. Thanks for coming on and sharing your experience, what you learned along the journey of being able to invest for yourself.
Yes, sure.
Awesome. Thanks. And let us know what your biggest key takeaway was for those of you who are listening to this. We'd love to hear so we can support you as well on your journey to start making an income from investing. Manuela, let's do our move.
Yeah.
Ching. See you.
Bye.
Please be aware, we are no financial advisors. We do not provide any advice. We only share our experience and our results are not typical. If we mention any stocks, funds and other type of investments, it is for educational and illustrational purposes only. Most people are unable to achieve similar results to ours. If you want to achieve similar results, you have to commit yourself to systemize, to learn and to stick to the rules.